Today, it takes more income to buy a home than at any other point in history. Mortgage demands have fallen to the lowest levels in near of a decade, and the housing crisis in the UK just seems to keep getting worse. So that begs the question, with today's prices, is it cheaper for you to buy or rent? And which option is going to save you the most amount of money long term? Well, to do that, we're going to dig right down into the trenches and analyse the true cost of ownership across the United Kingdom. And stick around for the results because you may be surprised by the answers. Alright, now before we get started, there's this preconceived notion that renting a home is just throwing away your money, whilst buying a home is actually making a good investment. But neither of these things actually tell you the full story. So, to give you a better idea of what is involved, let's go back to the beginning, look at the basics, and start with owning a home. Now, I think most people would compare the monthly cost of rent to the monthly cost of a mortgage and immediately think, well, I'm only paying a little bit more to make the mortgage payment, which means that I'm getting more out of it in the long term because I own the home. So renting must be bad. But, as you're about to see, that's not always the case. Now, when you buy a home, the first thing you're going to have to consider is your mortgage deposit. Now, while you may be able to search around and find really favourable terms for your mortgage deposit, most providers will require you to make a down payment, and that can range anywhere between 5 to 10% of the asking price to get the loan. And in the UK market, that can amount to well over tens of thousands of pounds. For example, if you had a home that was valued at £200,000 and the company providing you with the loan was asking for a 10% down payment, you would be required to pay £20,000 up front just to secure the home. Second, you need to consider your mortgage interest rate. Now, this is going to be your cost of actually borrowing the money, and today, at the time of recording, that cost is going to be around 4%. Now, what this means is that every year, 4% of your mortgage balance is being eaten away by the abyss of monetary policy, and it all adds up, as you're about to see. Now, that's because, third, if you put less than 20% down on a property, in a lot of cases, you're going to be responsible for paying what's called PMI. This stands for private mortgage insurance, and it's another cost that you pay on top of your mortgage if you ever find yourself in a situation where you stop making your mortgage payments. It's designed to protect the lender, basically. Now, the amount of PMI that you pay will vary depending upon the lender, but it usually somewhere sits between 0.5% to 1% of your overall mortgage. Number 4, we also have property taxes. If you're buying your first home, there is some good news. You will not need to pay any property taxes on a property worth less than £425,000. Anything over that valuation, you will then need to pay 5% in property taxes. Now just hang around for a moment, folks, because we're not done yet. Number 5, insurance. Home insurance will be necessary to protect you from natural disasters like fires, floods, earthquakes, anything of that nature. Now granted, I'm not expecting a volcanic eruption to happen anytime soon, but, protect yourself. According to Go Compare, the average homeowner pays about £162 a year on a £250,000 home. However, when up to 4 in 5 UK households are underinsured currently, we can expect the cost of home insurance to rise to £175 for the proper coverage. Finally, on top of all of that, you're also going to need to consider repairs and maintenance. That's because everything in your home has a lifespan. For example, your boiler will last for around 15 years and that'll need to be replaced at a cost of around about £1,500. Your roof may need repairing after a heavy storm, you've got your energy bills, you've got your water bills, so overall in the long term you've got to factor in repairs and maintenance. So, taking all of that into account, here's how much it would actually cost you month on month to own a home here in the United Kingdom. So let's take the example of buying a £300,000 home. At a 10% down payment, you'd be out of pocket £30,000. You'd then receive a loan of £270,000, which at a 4% interest rate brings your total to around about £900 a month. If you then pay PMI on that, you're then responsible for another £90 a month on top of that. As a first-time buyer of a £300,000 home, you won't need to pay any property taxes, but you will need to pay council tax, and that'll come to an average of around about £200 per month. Home insurance is likely to run you for about £30 a month, and if you spend another 1% of the property's value on repairs and maintenance, that's going to add an additional £250 a month. So with all of that, your average mortgage monthly repayment will be around about £1,470 a month with £30,000 as a down payment alone. So that's the buying side covered. Now let's take a look at rent. Fortunately, this one is very easy to understand. The price you pay is the price you pay. There's really nothing else too fancy about that. But in turn, that then begs the question, can you rent a £300,000 home for less than £1,400 a month? Now, while the location of the home will play a big part in this, according to Zoopla, the answer is actually yes. In fact, on average throughout the entire UK, it is much cheaper to rent than buy. For example, in Leeds, you have this home, this 3-bedroom detached home available for £300,000 to buy. And if we scroll down here, you'll be able to see that the average monthly cost of the mortgage is £1,626. Or instead of buying, you can take a look at this 3-bedroom property here with a price of £1,200 per calendar month. Significantly lower than what we were paying for the 3-bedroom detached home that we were buying. And these aren't just two cherry-picked examples. On average in the UK, the cost of renting is going to be significantly cheaper than the cost of buying. Although it is worth mentioning that it is essential to have a very good credit score before you even consider buying or renting, so make sure you look after your finances, otherwise you won't stand a chance of getting anywhere on the property ladder. Now, as a man who's worked up and down the land and worked throughout the UK, I think I'm fairly qualified to give a fair assessment on what kind of flexibility renting can offer to people and why it's definitely an option you should look at when trying to decide whether you should buy a home or rent a home. If you buy a house, with mortgage repayments, you have to pay back the valuation in full. However, if you're renting a home and you're not planning on staying in that location for longer than 5 years, renting will be cheaper for you in the long term because then you're not forced to pay back the entire value of that property. Secondly, if you're taking advantage of the current situation where the cost to rent is cheaper than the cost to buy, then you're going to be saving money in the long term as well. We only need to look at the examples we discussed earlier. If you rent the £1,200 property as opposed to buying the £1,600 a month property, then you're saving £400 in the long term per month. So you're getting a much better return on your cash for a good quality roof over your head. Third, and I understand this may be pretty self-explanatory, but if, like me, you believe that the markets will fall and the prices of buying a home will fall, then renting is a better option for now. So what do I think you should do? Should you buy a home or should you rent a home? Well, if you're a first-time buyer and you're paying attention to what's going on in the housing market today, if you've got the coffers, if you've got some money in your pocket, if you've got a good credit score, I would recommend that you look at buying a home. There are many studies out there that are saying UK property could fall by a further 3% in 2024. So this may be the ideal time to get on the property ladder. And don't forget, if prices are too high and people are desperate to sell their homes, they will be forced to drive the prices down in order to make their homes more appealing to a first-time buyer. But ultimately, there's good and bad in both. You know, there's pros and cons in buying, there's pros and cons in renting. It just comes down to your own personal situation and where you see yourself going for the foreseeable future. But I will just say, in my humble, unqualified opinion, the liberty that you get with property ownership, that's something you just can't buy. Nothing better than going around beating your chest saying, this is my land, you know, this is my turf, baby, my territory. But there you go, guys. That's my insight into the UK housing market today. Thank you for watching. Be sure to drop me a like, comment down below, subscribe down below, and I look forward to seeing you all soon. Take care. Peace.